talk about the Iran war, risks, NVIDIA and Meta signing a massive deal, and of course the FOMC news that comes later this afternoon. So real quick, a couple people still piling into the room. We can play more Zeppelin, that'd be fine. My outlook is calmer than you are. Durable goods, housing starts, I'm sure those numbers were fantastic. I did not have time to read them yet this morning. We will see them at 9:20 when I hand off to Mr. Kaufman. Industrial production, FOMC meetings today, earnings in focus, DoorDash. What did that even do? Whatever. This thing's so oversold, it's almost impossible to know what to expect out of DoorDash. ADI, Booking, and eBay. Booking and Dash have both been destroyed in recent weeks. So post-trade, post-earnings trade setting up nicely for the possibility of some volume-weighted average price moves heading in late into the end of the week. Add Dash and Booking to your list. We'll talk about some of those names today when I do my live session. We have that PCE inflation data that comes out on Friday. That is the more important figure this week. We'll get a couple of updates on job openings. The story right now in the markets, particularly out of JP Morgan's desk, and every single media outlet is reporting this morning, which leads to a little bit of uncertainty about, well, trend, right? So last week, we all got worried about the AI disruption trend. And I spent an hour on it yesterday in the live, in the member room. JP Morgan is calling effectively the bottom of that. Goldman did that last week, but I just want to remind you, this is not going away. Every new iteration of Claude, every new iteration of ChatGPT, every new OpenAI venture is going to spur this again. So we're moving past that news cycle. Now that everybody got to peak fear, now that they were able to get everybody to buy those puts, and now the narrative shifts to, well, AI adjacent. Here's where we sit with momentum at this moment. Different number than usual, but that divergent on the NASDAQ is important, -9 on the S&P. So we are right across the board. Nothing new, but we are highly range bound, and that's really been the story of this market for the last 2 weeks. If we dig and we just take a real quick look at what's happening with the S&P 500, jump over here, we scale back to last 20 days. That's MCO, forgive me. Yikes, that's a lot of color. But that's the upper bound of the volume-weighted average price, third standard deviation. That's the lower bound. That's what matters. The fact that these deviation lines are effectively breaking to these levels, and we have been stuck in this pattern of up, down, up, down. And as I said, I kind of joked, it wouldn't shock me if we went right back to 696. But no real shift in momentum, no real conviction, nobody stepping in and saying, hey, we're going to go in this direction now. There is no catalyst. There is no major pull here. And I've said before, I think that if Japan wasn't printing and if the S&P 500 wasn't being supported by, well, Fed monetary policy and China wasn't printing, we would be lower. But it will take a large catalyst. And what is a large catalyst? There's no bigger one than war. The organizing principle of every society is war. JFK. You can tell I've been watching that film. Anyway, this story is actually a little surprising because I know that yesterday we were talking about the idea that Iran was saying that everything was cool. And now Axios comes out with this story. This was the driver. This was the headline. This is what everybody was kind of freaking about this morning, is that the Trump administration, according to sources, whoever they are, can we just name the sources? Just tell us who it is. Because we have this happen a lot. Whatever. No. Can't do that. Journalism rules. Ethics. Yes, ethics. I learned about those in college. Trump administration closer to war with Iran than people realize. And that this would be a weeks-long campaign. Oh boy. While that would be transpiring, right, a military strike if nuclear talks fail, Iran and Russia are running Navy drills in the Sea of Oman tomorrow. And the U.S. Energy Secretary wants to end all Iranian nuclear progress. The IEA focuses on energy security. Oil reaction has been a little bit muted, but the argument basically goes that the market has not priced this in, right? War is closer than markets are pricing. A military operation would be massive, weeks long, joint U.S.-Israeli, and oil could move $10 to $20 on escalation. This is the tail risk that is not being hedged, according to COT data. I'm not one to speculate on this. I have not heard anything. I knew that Russia was going into Ukraine 3 months before they did, and I haven't heard anything that would suggest that this is completely on the table. So I'm not going to make positioning on this. And conversations I had recently has really been more focused on Iran, on the Russian-Ukrainian war, than it has any opportunity or any invasion of U.S. operatives into Iran. But that brings the question to you guys of actually what you think. Do you think there's a deal? Do you think we'll see more talks? Do you think it's all theater? There's a chat for a reason. You let me know. Black hole sunbite. Okay. Reason I knew was because my friend was at the time, he had the most oil under contract at one point in the world, and he was working for a Russian oil trading group, and the State Department basically told him in October and November, pick a side, and he chose the West. All right, let's keep going. Multi-year, this needs like a baseline, this show. Like some sort of like lower track. I don't know. What's the opening song from Drive? That should just be on the whole time. NVIDIA and Meta mega deal. Millions of chips. Great. They're buying millions of Blackwell, Rubin MP GPUs. Woo. Deploying Vera CPUs in 2027. Threatening Intel and AMD dominance. So this is a shot in the arm for NVIDIA. And NVIDIA's price action has been pretty good in the recent moves off of those lows since we tapped that bottom from the software apocalypse. NVIDIA is boosting the India AI buildout, sold an ARM stake. Again, Meta building AI infrastructure at an unprecedented scale. And that is a question that this market is going to have to answer at some point. You remember, Meta put an incredible amount of money into the metaverse back in 2022 when the liquidity cycle was moving in the opposite direction, much like we are right now, and the stock got crushed. Ultimately, it required intervention in the markets from some of the top money managers to simply state they have to stop doing this, and then the stock started to recover on the back of momentum. But that said, this spending is going to go until it cannot. So it's important to just keep in mind that this narrative, it is getting a little long in the tooth. Meta's deploying chips in its own data centers, plus NVIDIA cloud partnerships, CoreWeave and Crusoe. We are looking forward to Crusoe's IPO whenever that happens. I will be in on day one, and we are looking at the largest GPU customer deal ever. Meanwhile, Japan investing $36 billion into U.S. oil, gas, and minerals. SoftBank, shocking. SoftBank gets to do the deal. Why don't I get to do the deal? SoftBank, how many times are they going to get bailed out? They're leading a $33 billion Ohio gas plant. Once again, reminder that sovereign banks, big banks, other countries, they don't want to buy U.S. debt. They want to buy U.S. stuff. They want to own data centers. That's the sovereign wealth model. That's the idea that you own things that people need. And once again, these are called choke points, right? Choke points, toll roads, things that it doesn't matter what currency it's priced in. These are the things that are inevitable and needed for society. Toll roads, pipelines, gas plants, all of the things that will continue to accrue value, will remain inflation proof. The sovereign model is right in front of you. Watch and see what the UAE and Norway and Dubai and even SoftBank are buying here in the US. And then do the same thing. Because once again, if something goes wrong, they're not going to bail out the bond holders. They're going to bail out the things that the sovereign funds invested in. All right. PANW, bleh, not good. AI cybersecurity names. This is an interesting story, too, because one would think that you would need more cybersecurity in the age of AI, particularly identity theft, things like that. But PANW cut their guidance. They beat earnings, but the EPS guide was weak. And remember, it's not just about the earnings numbers. It's not about EPS and about revenue. It's about what they're saying moving forward and what market expectations should be. So the guidance weighed on cyber names, but that NVIDIA Meta deal is still lifting semis. It is mixed signals for technology. Technology has been pretty choppy, particularly those software names. And the other thing about it, the long semis trade with the short software has delivered a 35% return so far this year. And the bets on the semis are still massive third standard deviation versus about a 2.5 deviation side on the short. So at some point, right, you've got this going. At some point that compresses, or at least gains are taken, and we see some radical repricing as a result. Watching DoorDash bookings, eBay, Moody's, and Garmin after the close. All right. Meanwhile, we got talks everywhere. Everybody's talking. Who's not talking? Ukraine's down. Ukraine and Russia trilateral. Both sides agreed to update leaders and pursue an agreement. We'll get there eventually. The big story, though, out of all of this, and I've talked about it, is Eric Schmidt's commentary over the weekend in the Financial Times. It was the 13th, so maybe it wasn't the weekend, maybe it was last Friday, saying that the future of war is the no man's zone in Ukraine and Russia. And it showcases that we are in a major pivot point militarily and a shift toward drone warfare over the old school tanks and the traditional land elements. There was a time when everybody said that Putin could have just marched right across Russia. He's not getting through. Not with the ability to just run these $400 drones into critical infrastructure. So this is why Schmidt, and you look at Parker, and you look at names like AVAV, that's where the military spending is going. It started at about $14 billion in AI. I'm going to tell you, it's going to be in the hundreds of billions of dollars in the next 5 years. So defense is the one major practical thing to pay very close attention to. The next battle, I mean, if we are going into Iran, I will guarantee you, and I will bet, that it is a heavy AI-driven move compared to a traditional Gulf War type style invasion. Berkshire is dumping Amazon. Wow. And here I was thinking Amazon looked cheap. Amazon trading at a price to earnings ratio that it hasn't in a long time. Still dominant force in the broader market. They are moving their money to the New York Times. Wow. Okay, well, let's just say if that thesis is a value play, that's interesting. If it is that, hey, you know what comes in 2 weeks? Primary season. So we will see. And New York Times did pretty well last time around. The whole resistance, what have you. I have no political commentary. I'm just going to simply state that the calendar may favor the New York Times which is interesting in an era where news is so heavily commoditized. The final thing is the ECB's Lagarde may leave before her term ends October 2027. The person most likely to replace her is the general manager of the Bank for International Settlements. Slovakia is declaring an oil emergency, and US and Cuba are talking. Why not? Finally, gold, 49.30. ANZ targeting a 5,800 intact. Central bank demands remain strong. Silver bouncing. Copper is steady despite the China holiday, and Glencore is returning $2 billion to shareholders. Once again, we remain bullish on commodities across the board through this side of the liquidity cycle, looking for more speculation and more value and more stimulus action out of China to help boost metals. All right. Yes, I am very long silver. Let's see. So, speaking of drones, here we go. Kratos. The momentum looks good. I need to change a couple things around here so that you don't have a seizure looking at this screen. One moment. I'm realizing the value of the SMA on the 20-day moving average. Sure enough, that SMA is what was tapped yesterday on the SPY, but I still will use the SMA or the EMA for individual equities because I'm more interested in short-term moves, possible momentum on a lot of these names. Now, what I'm looking at right here, I'm going to look at my 1 year. Kratos has pulled back a lot, like a lot. And I get it. And you look at it and you say to yourself, well, is the optimism over? No. They just got another major award this morning from the Department of Defense, their Joint Hypersonics Transition Office, to test and evaluate thermal protection systems for hypersonic vehicles. Ugh. Yeah, we're doing it. This is a fan favorite of mine and a great momentum stock. And right now, cleanest way to focus on this, I'm long. I just am. It's coming off of its 100-day moving average EMA back on February 12th. And a nice move back to 93. The histogram on the MACD is breaking down pretty quickly. Its ATR is cooling, and it's starting to wake up from largely oversold on the MFI. This is something that I just like to own the stock. Not that complicated. You have these periods of time where there's a lot of optimism, and then it runs, and then it pulls back, and people start to get a little bit dodgy about it. But the reality is that line to line, this is just kind of a period of overemphasis, but just bring this down here. Bring this down here. It's just smooth momentum elsewhere through the cycle. So I'm buying it. CTOS. There's other things to do. Sell spreads on it. I think that you could sell put spreads on KTOS down at around the 85 to 80 level. Under that 100-day moving average. Very important to note, if we look at the 100-day EMA, you're going to see that it has done a pretty consistent job at not staying under that level for very long. Let me pull that up real quick. Let's make that one a nice white line. Right? We're not there long. So I'm seeing targets on this stock in the 130s. I mean, that's some pretty aggressive moves. I will note this is a very strong momentum stock. In addition to that, it's important to note that this is going to have tech valuations. It's not going to have defense valuations for pretty obvious reasons. So KTOS, fan. Just saying. Where did my charts go? That's not it. 1 second. I lost my place. I got too many things on the screen now. Nope, nope. Oh, for goodness sake, get out of there. All right. That's not it. That's it. Disco. There we go. We got it. Any questions about KTOS? All right. I'll take it. On copper. All right. Core, RTX, again, we got more war. I don't know what to tell you. I mean, it's literally just, I just keep saying over and over again, where's the money going to go? $1.5 trillion is now on the table for a defense budget. So RTX pops up again. Continued strength, continued momentum. And this is a pretty simple thing. You buy the 200 and you sell at the 210. And you keep a relatively tight stop, a 20% level, and you define your risk up front. Right? It's not that complicated. It's not that complex. So, something as simple, walk through this real quick. I don't know, going out to the 20th of March. Don't pretend that war wouldn't drive these stocks up. It'll wide spreads, man. If you got the 200, 210 for March 20th, that should cost somewhere between 450 and 475. 50% probability of profit, max return on risk 120, break even at 204.53. And one of the key things about that is you're at 204.65 now. So rather than buying 100 shares of the stock, $20,000, right? You're buying a spread that can deliver the types of returns that would be generated if you just got up to 210. And the momentum is smooth. Now, the other side of this is just selling spreads. The 50-day moving average is down to 190. So that takes us out into March, and a probability of profit on a name like that, if you were selling a put spread, if you write the 190 and bought the, and you're going to have, this is going to be a tough one, but we'll look at it. If you could do the 190 with the 185 and get that somewhere around $75, it's an 18% probability, it's an 18% return with an 83% probability of profit. So you're down here, right? RTX. You set a tight stop back here at that 197 level. If you break under it, you just buy the contract back. That's March 20th for that. You have Core and you have WDC as well. Coursera, not a name that I have been watching in any capacity, but it's been beaten to the ground. And we've seen in recent weeks, right, a stock go from 12 in October, height of the momentum, to now this $6.14 level. This company's unprofitable? Great. Book per share is $3.80 and cash per share is $4.72. So we're kind of in this interesting environment where intrinsically it's becoming mildly attractive. This was supposed to be the great right? Everybody's going to go to school from home. Yeah. Well, watch that 620 level. And if it gets above 620, buy it. Look for a move possibly back to 7. And if it doesn't, you let it go. Short term, that's it. Not trying to do much, just trying to see if maybe we do get a squeeze. 12.6% is the focus on the short side, short float. WDC, Western Digital, smooth momentum. It's just a buy and set a 2% stop. It's kind of boring. Downside, TTI. Eesh, that ain't good looking. Yikes. I don't know much about this one. I don't know who they are at all. But it's on the screener and it's breaking under key moving averages. I have no idea who that is. And the option chain is terrible. It's pretty wide open. But if you're going to do something, if you need to do something, maybe look at that $12 put and see if you can get it for like $115. Let's put a price in on it. On the other side, WU. Kind of interesting. This is a stock that's paying a 10%, like a massive yield, and breaking down and losing once again. Looking for, I mean, you might be looking at $8 again. This is actually one of those names where I would be content to buy the stock at 8. So, what, if anything, can I do to inspire selling down here? $8 on Western Union gets me a yield somewhere in the range of, let's see, 20%, 20%. Yeah, it'd be over 10. It's about an 11% yield at $8. And we've talked about that. We've seen a lot of insider buying down here at this level. So it's not something I want to short. It's something I actually want to try to get into as a income play down there. We've seen a lot of defense by the executives at that side. Other names are PSNY. And then on the momentum side, right? I'm just going to tell you to keep an eye on this and the pricing action ahead of today and tomorrow. Gush is a double bull ETF around S&P 500 oil and gas exploration production. It's basically the XLE, but you just strip off the refineries. And it's been in a momentum move pretty strongly. It's holding above that 8-day moving average. It's not something to buy unless if you're going to trade this, the only clean way to do it is to just trade it above its 8-day moving average. If it breaks back under, you get out of it. But watch the ranges here. This becomes something that can be traded on volume weighted average price. There are options on it. If you are a speculator on war, you're going to notice some options that are going to be purchased on this. Keep an eye on the option chain here. See what speculators are turning to. NVIDIA is just pure strength. It has been pure strength. It's coming off that 100-day moving average. We had that sell-off that happened. We tapped it. Goldman calls the bottom. We squeezed up to 190. Here's your line in the sand back at that 100-day moving average. If we crack back above that 20-day EMA, that EMA becomes your base for your call. You sell out of the money to the upside back at the top of this range, which is around 192.50. That may be a 185 to 192.50 spread. You keep a stop very tight, looking for momentum to return. PANW. This is volume weighted average price. So, for everybody in the back, let's do this one more time. Okay? Making sure I got everything. What would you do on a W? Sell the $8 puts? Yes. Or maybe try to sell, like, see if there's an $8.50, $8 put spread. Or maybe, I mean, not 9 and the 8 wouldn't be the worst either if you can get the break-even price down into like the 860 range. I don't know what that would be, though. What is your take on Oxy with earnings out after the bell? I mean, Permian Resources and Devon have looked pretty good from my, my perspective. OXY, I mean, really, at the end of the day, this is the long-term thesis of Buffett. I have gotten out of Oxy. I have not traded Oxy since we were finally taken out of a position that we had to unwind over about 8-9 months. I don't really invest much in the upstream oil and gas space. I am a midstream guy, so I prefer to stay in the pipeline space, but I haven't dug into their balance sheet in like a year, in maybe like 6 months, so I can dig deeper into it. I don't know everything. First rule of markets, but I mean, I'm interested in it from a trading perspective. PR has been on fire. Devon has looked pretty good. Obviously, merger with CTRA in play. All right, one more time for everybody in the back. Let's do this real quick. All right, we did this yesterday, and we were talking with TradingView, right? How do you set up VWAP? All right, so I have to have everything open. Try to get everything out of the way, but I can't do that. Here's my face twice, which is great. Who doesn't want? What parent doesn't want that? In your little lab, buttons. Oh, that's nice. Somewhere saved in here, we have the actual saved version of this. It's probably called Study. VWAP. VWAP. You do it 3 times. Remember, 3 times. Think of clicking your heels together 3 times. That was a movie? This needs to be -3. This needs to be +3. That is your standard deviation line. You will click OK. Now you have -3 and 3. -2 and 2 is your default. Now you change this last one. -1 and 1. Okay? Make that one as well and hit apply. Now we bring this down to our daily. You have a white line, standard deviation. This is VWAP. This is first standard deviation, second standard deviation, third standard deviation. You have this open on your chart, and now you have PANW reporting, and you see this move down. If you're looking down here for a possible reversion, you also want to anchor your move to the moment that the stock was, the earnings names came out. And the reason that we do that, which is back here, is we start to look and see if and where institutions start to add more positioning and try to defend key lines. Okay, so we'll talk a little bit about volume weighted average price. Keep an eye on PANW. You're going to get some crush that's going to start this day. Don't start firing out of the gate, obviously, either, right? It's important that you note that you're going to wait for option prices to pull back. If you want to trade the stock, but look for some pretty sharp moves on this stock. And if we move back to VWAP, volume weighted average price, and it can't crack that line, look for a continuation of fade of institutions selling, and that's how you can take advantage using options that would trade and fire tomorrow. All right, that is it for me. We will dig into anchored VWAP a little bit later. I hope everybody has a great trading day. Don's coming up in 10 minutes. Questions, support@theotrade.com. Put Garrett in the subject line. We will add the links to these slides in a moment. Have a great trading day, everybody.